Good morning, everybody. We have a mix to higher trade in the grain markets here early on Friday morning. It is 6:30 a.m. Central Time. December corn futures down 3/4 of a cent at 397 and 3/4. November soybeans are up 5.5 at 1057 and a quarter. December Chicago wheat up 1 at 604 and 3/4. December Kansas City wheat up 3 1/4 at 545 and a quarter. December spring wheat up 2 1/4 at 554 and a half. I think that renewed concerns regarding COVID have affected a lot of financial markets this week. You look at the stock market, the S&P 500 is on track to lose 4.5 to 5% this week. We've got a lower trade in the futures market this morning. I think that this is partially responsible, at least, for some of the selling that we've seen, not only in the grain markets, but in a lot of commodity markets. You look at the energies in particular, precious metals, a lot of liquidation in a lot of markets here. Cases in both the U.S. and some countries abroad are rising, prompting ideas of additional lockdowns, restrictions, that sort of thing. So it's kind of a risk-off deal this week because of that, I think. Corn and soybean export sales remain excellent. USDA reported another very strong week of sales for both crops yesterday. Soybean sales for the week totaled 1.62 million metric tons, of which about 66% was sold to China. Corn sales, even better, 2.24 million. One thing that's noteworthy in the corn export sales number is that China was almost completely absent last week, and that's a factor that may be of concern. I think the trade had really hung its hat on the idea that China was just going to continue to buy corn at a breakneck pace, and the fact that they were mostly absent last week, I suppose, is a little bit of a concern. Is that a trend that continues, or is this just a lull in the activity? We don't know that right now. Mexico made a huge purchase of U.S. corn yesterday. USDA reported a flash sale of a total of 1.432 million metric tons. That's 56 million bushels of U.S. corn to Mexican buyers. 62% of that sale is for the current marketing year. The remainder is for the 21-22 marketing year. That was the largest sale to Mexico of corn since December of last year. USDA also reported a flash sale of 140,000 metric tons of corn to an unknown destination. So the export demand remains pretty good, despite the fact, again, that China was absent from those corn numbers in the weekly report. Brazil's president confirmed that the country is importing soybeans and other food staples. He said, "We are importing soy now because the price is going up." The story here is that Brazil kind of has just a domestic shortage because they've sold so much to China, and demand has been good. Prices there are very high. So it's very likely, or may have even happened, that Brazil bought at least one cargo of beans from the U.S. They could buy a little bit more. It's probably not going to turn into anything extremely substantial, but it should be enough to fill the gap between now and their harvest, which is, February, March. The U.S. Southern Plains will again turn dry. We had some rain, some snow across some of these key HRW areas in Texas, Oklahoma, Kansas earlier this week. But you look at the forecast this morning, and it looks like we've got a drier pattern that will return at least through the first week of November, if not beyond that. So the wheat market, despite the fact that it's set back, has not completely fallen out of bed. I don't think we've seen like a total drought busting event. I think we've seen just a little bit of relief, and now we've got a dry forecast. So the wheat market could actually be acting a lot worse, certainly. The corn market has added just a little bit of carry this week during this correction. The December 20 out to July 21 spread offers about 8.5 cents of carry this morning. That spread traded a very small inverse just earlier this week and has since corrected lower. I think a lot of farmers who have existing December corn sales, either futures or HTAs, they would like the opportunity to roll those forward and pick up some carry and use their on-farm storage. And that's still an opportunity that could become available. There's certainly the possibility that these spreads widen out even further between now and the time that those contracts would need to be rolled. In a normal year, that spread from Dec out to the following July might offer you 20 or 30 cents of carry. And of course, this is not a normal year, but a lot could happen here in the next few weeks. The corn market, despite this setback here and despite the fact that the nearby contract is below $4, I would certainly make the argument that a technical uptrend remains in place. There's a trend line that comes up off of the August low and through the late September low on the December chart, and we have not busted that trend line yet. We'd have to trade below 390, 388 here today in order to negate that trend. Export demand still very good. Ethanol, we haven't talked a lot about ethanol, but ethanol is a problem that could reemerge given this spike in COVID cases and additional lockdowns and restrictions. We lost 500 million bushels worth of corn demand last year because of COVID, ballpark, and that number is different depending on who you ask. And we're losing demand on a consistent basis this year. It's not as much as we had lost last year, but this could turn into a bigger deal. And if this continues here for another couple months and ethanol production turns back lower, that could be a problem. Soybean market could be acting a lot worse, I think. I think that to some extent, fund traders are still very heavily long. I think they're defending that position. We've seen a setback, but the market's not falling out of bed by any means. Brazilian weather has improved a little bit. They caught some rain. They have some more in the forecast. So I think that the potential for a record Brazilian soybean crop certainly remains intact here at this point. Wheat futures, again, you've got to focus on this U.S. weather situation. Global prices have ticked down this week, but are still trading at levels that are well elevated versus anything that we've seen the last several months. Cattle futures were one of the few markets that were able to close higher yesterday. We actually had some sharp gains in these fat cattle contracts. December fat cattle up $3.30. February's up $2.67. The feeder cattle market up more than $1 across the board. Cash trade was 106 in the South, 103 in Nebraska yesterday. We'll see what develops here today. Head of the cash open, the stock market's lower. The Dow is down 170 points. It had been down a lot more than that overnight. The S&P is down 21. The bonds are up just a little bit. U.S. dollar is down a little bit. Crude oil is about flat. Precious metals up just a little bit. If you'd like some more information, visit my website, standardgrain.com. Go to that website and click on Grain Marketing Plan. If you would like to know when, how, and specifically I am pricing corn, soybeans, and wheat throughout the year, it's broken down by crop year, and by percentage. Take a look at that subscription service. It's $49 a month. You can cancel it at any time. There's no trading account required. There's no other fee or obligation. Everyone have a wonderful weekend. I will talk to you on Monday.